Hi, welcome to the What It Means podcast. I'm Jonathan Miller. And for those of you that don't know me, I'm the co-founder and CEO of Miller Samuel. Been around for about 40 years in the appraisal business, and I've personally appraised about 8,000 properties in my career. So uh, I'm I'm surprisingly alert and awake after all that. Uh, I'm also the author of the Douglas Elliman Market Report series. I've been doing that for over 30 years, 31 years actually. I teach market analysis at Columbia. I'm doing that since 2018. And I'm the author of Housing Notes, which you can go to at housingnotes.com. I've been authoring that series of commentary, which I encourage you to check out. It's free and got a few dad jokes in there. But I've been doing that for about 11 years. So if one thing you can say about me is I'm consistent. Um, so what I'd like to do is I'd like to cover a couple of topics, just one minor discussion point about cement of all things. I'd also like to talk a little bit about chaos and second homes. And then the bigger part of my discussion is going to be about Bitcoin and in the context of residential real estate, which I think you might find useful. But just to start off with the commentary about cement, just real quick, I wrote about it in my housing notes that came out yesterday, Monday, June 23rd. And one of the challenges, or one of the, as I've mentioned a lot about the tariffs and, the what that's trying to do. And one of the things that it's it might be doing is that we're seeing like there was just a big IPO on the biggest cement maker in the U.S. And housing materials will probably be less international as ways to sort of skirt around the tariffs and the costs. That inherently makes it more expensive, but we're already seeing, a few moves like that. And I thought that was interesting. Cement being, one of the primary construction materials. I wrote about a lot about cement last summer, and the one big takeaway I had was that if you added up 3 years worth of cement usage in China, just 3 years, that is more than the cement usage in the United States for the last 100 years. Cement is a big part of the building landscape in China, as I've seen firsthand. Um, Enough about cement. The next thing I wanted to touch on, I did a podcast which is on Housing Notes. Um, it's with my friend Barry Ritholtz at Bloomberg Radio, and it's a podcast called At the Money. The abbreviation for that is ATM, which I think is pretty clever. But we touched on second homes, and one takeaway, you can listen to the podcast and get more out of it. But just the one takeaway I had was that when you think of if you're getting a mortgage for a second home, it's kind of important. When you think of interest rates and what deal you'll get on interest rates when you buy a house. Um, first mortgage, primary home tends to be the lowest rate. Second homes generally have a higher rate than first homes, but they have a lower rate than investor homes. And investor homes are seen as a, a higher risk. One of the things that I thought was interesting on second homes, the topic of second homes, is that the idea that people are buying second homes, and part of the reason they've been buying it is because of the whatever the policy at their company is for work from home. Um, And in the last year, there's been an increase in uh, RTO, or return to office. So before people buy a second home, they might want to revisit what the outlook looks like for the work at home policy in your current company. I'm not suggesting we're normalizing or going back to pre-pandemic levels, but that is one of the drivers of second home purchases. The other thing, when in my research, I've consulted for a firm that was sort of a luxury version of Airbnb, and basically what a couple things I took away. One was that uh, lenders generally consider a second home, and every lender, could be, this isn't, I can't guarantee this, but this is my general experience, is that second homes, the if you have control of the residence, meaning if you have an Airbnb, but you have control of the residence and you don't use a professional management company, but you have control of occupancy for at least 6 months, just over 6 months, then it's not considered an investor property. But if you have an Airbnb and use a professional management company to run it for you, that is considered an investor property, regardless of how long you use it. So there's a lot of nuances with that. I just thought it was probably, interesting to you, as it relates to housing. Um, and the final topic I want to talk about, but I'm going to go into a little bit more detail, is Bitcoin. And uh, and when we think about Bitcoin, I think first of all, people get very confused with blockchain and Bitcoin. Bitcoin is a cryptocurrency. It's the first currency. It's sort of the standard that there's hundreds of cryptocurrency, Ethereum, and Dogecoin, and all kinds of different varieties. But Bitcoin is sort of the standard that people refer to. It's the Kleenex, the brand of tissue of cryptocurrency. But I bring that up because there was a commercial I saw online for Coinbase. I actually wrote about this in Housing Notes, and the commercial is on there. The link to it's fascinating. And Coinbase is a cryptocurrency exchange, and it essentially allows you to buy or sell or store or transfer cryptocurrency to other places, other individuals. And Coinbase had this ad where they talked about uh, how you could buy a house with uh, Bitcoin. And they were saying, I forget the actual numbers, but back in like 2012, you could buy the average house for, you know, uh, I want to say, like 10,000 Bitcoin. I don't remember what the number was. And then 3 or 4 years ago, you could buy the average American house for, like, 15 Bitcoin. And then now you can buy the average house for about 4 Bitcoin. And so they were sort of making fun of fiat currency, the dollar. They were making fun of regular currency, saying, the price of housing from a Bitcoin perspective is dropping. But that's because Bitcoin has risen dramatically in value. It's sort of hovering around $100,000 a Bitcoin. Back in about 2012, um, I I think it was around $10, and I was thinking, "Well, I should buy like 10, $100 worth, and just for fun." If I had done that, I never did. If I had done that, it'd be worth about 10 million right now. And there's a famous story about Bitcoin, about the guy who had 10,000 Bitcoin, and He used it to buy two Papa John's large pizzas. If he had uh, just kept it and not bought the pizza, those that Bitcoin that he had back then today would be worth about $1 billion. So arguably that's the most expensive pizza ever sold, in history. Um, I wonder if there's an interview of that guy and how he felt. I don't know. But anyway, and so we hear the term Bitcoin, thrown around a lot. Um, the way to think of, and it's confused with blockchain, the way to think about blockchain versus Bitcoin, think of blockchain is a parallel comparison would be blockchain is the internet and Bitcoin is an email, right? That they're just not the same thing. But those are probably the two most common words thrown around in this conversation. Um, as it relates to housing, that commercial tried to make a comparison. Um, is that because Bitcoin is so volatile, it's, think of my pizza example, um, that it's really not a great vehicle to price housing. When 15 years ago, I started tracking media reports of home purchases that were made with Bitcoin, and it was always somebody in the industry that was doing it. And what I found, I stopped doing it after a while because what I found is literally every transaction was somebody essentially agreeing to a price, translating into Bitcoin and paying with Bitcoin. It wasn't like, someone was saying, "Hey, I'll sell this house for 5 Bitcoin." And so it was more like a gimmicky sort of application to sort of, you know, infer that Bitcoin was an alternative currency. The easiest way I think of why Bitcoin, at least in its present state, is not really appropriate for housing is the extreme volatility that it has, but also there's like 21 million Bitcoin in the world. It's a fixed number, and the problem with that is it promotes hoarding. That it's really people don't spend it freely like they do, cash or the dollar, so to speak. So it's not really being used in the way that regular fiat currency like the dollar is being used. Um, the other part about it is, man, it is a massive consumer of energy. The way you get more Bitcoin or create, or the way you're able to sort of mine Bitcoin to add to your wallet is to run software on a laptop. There are server farms that run this stuff, and it's a massive drain on power. So it's kind of kind of not so great for the environment. The other is that there is no consumer protection, and actually the regulators have been sort of stepping back. So there is also a liability that you're exposed to if the regulatory world really sort of clamps down on sort of the tax exposure, or your tax exposure to using this in transactions. So I know just enough about Bitcoin to be dangerous, but I know that the extreme volatility really prevents it from being sort of this common everyday tool to buy and sell housing. Maybe that'll change in the future. I don't know, but that Coinbase commercial that I saw, I encourage you to watch because it's pretty compelling until you really think about it and think about the detail, the fact that Bitcoin has risen much faster than housing has over the last 15 years of its existence, or its sort of common knowledge existence. Anyway, I hope that that was not confusing. There's so much more to the story, and actually, I wrote about it the other day. If you go to Housing Notes, I talk about I have bullet point lists in a lot of detail of sort of the pros and cons of Bitcoin in the context of the housing market that you might find interesting, being, in the, as its application to residential housing. Anyway, um, I hope that was uh, informative. I'm sitting here in a hotel in Detroit, about ready to head back to New York after visiting with my wife's family, and it's about 95 degrees here. And one of my sons who lives in Florida, it's actually hotter in Detroit and in New York than it is in Florida, which is, I don't know, that's bragging rights. I don't know if that's bragging rights or not, but um, it is unpleasant. Anyway, I hope you got something out of this, and thanks for sharing your valuable time with me. And remember that the one thing, a takeaway of all this is that pie is always better than cake.